All right. Welcome, everybody. We're so happy that you've decided to spend this next sort of 45, 50 minutes with us. I am Allison Ball from the Grove, and I've got one of my favorite presenters here today, Sunshine Chapman, who's going to take us through how to get ERC filings ready for an audit. So, Sunshine, I know you've got a lot of content, and this is a topic that usually generates quite a bit of questions and because everybody's situation is just a little bit different. So let me turn it over to you and we'll get started. And folks, we are using the Q&A today for questions that you'd like Sunshine to answer. And using the Q&A panel helps us get back to you if there's any unanswered questions. So it's to your advantage to use the Q&A. All right, Sunshine, let's pass it over to you.
All right. Thank you, Allison. This is one of several webinars I've done with Lucio, and it's always a pleasure, especially meeting the attendees afterwards to kind of learn more about everybody's different situations. But my company is called ERC Provider, and we are the #1 affiliate of the top filer of ERC in the country, which is ERC Specialist based in Utah. So we've been doing this for very intensely for about 1.5 years now. And we've gone through so many different phases of the program. You know, it's little by little, we've gotten more and more information from the IRS about how to do it properly and how to account for things. So I'm going to share what we've learned so far about how to make do the best due diligence you can to make sure that any filing that your client may have done, whether it's that you did it yourself or has a professional firm such as mine do it, how to make sure that your ducks are in a row. So first, we'll do a brief introduction of what the ERC is. There we go. So most people know what this is, but the ERC is the Employee Retention Credit, and it's part of the CARES Act. It began as along with PPP and EIDL as a program to assist business owners because they were forced to shut down. Most business owners took the PPP because it was a lot of money right away, and the ERC was just a reduction in their payroll taxes over the period. So a lot of businesses took the PPP, which made them not able to get the ERC. But back in the last fall of 2021, the IRS opened it up some more and have made it so that people who did claim PPP can also get this. And also they made many more reasons to qualify. And I've done a webinar with Lucio and with the Grove recently, just last week, about the 3 different ways to qualify, digging really deeply into how each of those 3 apply to business owners. So this one is more focused on how to account for this. So it has gotten much more open to different businesses. And so our first poll is, have any of your clients received ERC credits? So Allison, can you pop that one up for me? So I think she's going to put the poll question on. It's going to just pop right up. There you are.
You can Sorry for a minute here. I'm just not a professional here, not a professional webinar. So I had the wrong poll showing and I didn't want to launch the wrong one. So yeah, so we'll just give you a couple more seconds here. We'll count it down. We've got 76% of people have participated. We'd love to hear the rest of you just for interest. Yeah, okay. Let's see, we'll count it down in 5, 4, 3, 2, and 1. Okay. So right now, 80% Sunshine say yes, I helped them file. 10% yes, they used an ERC service provider, and the other 10% was I don't know.
All right. So this is good to know. So you all have some experience with the ERC with actually preparing the filings. 80% of you, it sounds like, have done that. So now you're just looking to make sure that you, the files that you create for your clients to substantiate this have the correct items in them. So I will be sharing what our company does based on the IRS regulations and give you some, hopefully, suggestions that will help. So thank you for that. And get down to the next slide. There we go. So First of all, if you do want to choose a vendor, we talk to a lot of CPAs all the time who say, I've done this once and I never want to do it again because it's such a bear of a filing, and it's also something that will be going away in a couple of years. So a lot of people want to choose a provider outside of their own firm to handle this. So when you do make that kind of choice, you want to look that they properly factor the eligibility, that they look at the employee counts, the actual reasons for qualifying, and following the IRS notices, which primarily 20-21, and there's many others as well, excluding PPP wages. There are a lot of firms that don't even ask about PPP, and that's a huge red flag because those wages do need to be removed before calculating. You want someone who's able to appear before the IRS, which means they would have an enrolled agent on the team leading the charge, which we do at our company. The person who sets up all of our rules and systems is an enrolled agent. Next, you'll want to make sure that they retain the documentation that they promise audit support, where they will have all of the calculations and the reasoning behind their making the decision to file and to claim this for your company. And then last of all, you want to make sure that they inform the clients. This is the big red flag with the IRS. You want to make sure that they tell the clients that they will have to amend their tax returns. So of course, a firm like mine does not offer tax advice. We do the service of ERC processing, but we always recommend that people go to their CPA and find out how they need to amend their filings on their income taxes to account for the receipt of this in 2020 and 2021. It is a reduction in the payroll expenses generally. So there have been some IDRs coming out. The IRS has trained several agents in ERC filings and how to identify red flags. Some of the red flags that we have seen, and we have turned over several companies to the FBI when they file basically a fake 941. So if the 941s are not real and they are, you can tell because they're kind of doctored, and that the company didn't originally file an original 941 that they're trying to amend, that is a big red flag. So those kind of companies are kind of easy ones that we always send directly to the FBI to handle, because they're trying to make up some company or some wages that don't exist. That's the thing we see most often. But IDRs are coming to clients and to their CPAs asking for more information about why they claimed the ERC. So some of the things that are being asked are, you want to know if your client filings do identify the government order. So we have a huge database that is actually just put out by the Association of State Governments that has a list of all of the 2020 and 2021 shutdowns. So and there's also, in addition to that, there's municipal, city, and federal shutdown orders, which can apply to businesses. So you'll want to basically have a document that outlines what happened, when it happened, what was the response of your business, and then what orders was that in response to, such as, all bars had to be closed in Florida. That happened on March 17th. That continued through October 17th of 2020. So therefore, the hotel shut down their bar. So that kind of thing. This is the order, this is what we did, and this is how long it lasted. So you'd use that for an example. Then you'll want to identify whether it was more than nominal. So that means more than 10% in this case. And the more than nominal can be based on things such as either revenue. So it can be based on sales. So let's say it was a used car dealership, and in 2020 or 2019, they sold 500 used cars. In 2020 and 2021, they were unable to get those cars due to a shutdown impacts that caused supply chain disruptions. So they only sold 20 cars. So you could do it based on sales type of things, or based on appointments. So if you had certain types of services, such as we work with a lot of doctors, and they used to be able to do elective surgeries. Lots of OBGYNs, they had to still do their regular thing. They still had to deliver babies, and they still had to do doctor's appointments, but they couldn't do any elective surgeries. So they lost a lot of income from that. So you would just have the record of what happened in those years and whether it was a more than 10% change in the business. And then another question that's often being asked is, was telework possible? So in those cases, I explained, restaurants, hotels, and doctors, no, you can't telework surgery. So, but if there's a company that just everything was fine, they just started doing it at home instead of at the office, then that would be something that wouldn't qualify them. So those are some of the main questions we'll get. The biggest factors that the IDRs are asking for is eligibility. So they want to, of course, look at the original 941, whether they filed their taxes properly and the amount of taxes that were claimed, the number of eligible employees, and the impact of the pandemic on their business. So those three things are what you want to make sure you have records of. The window for the IRS to request more information on this is 5 years. So people might forget all these things. So the good thing is right now to actually start making this file so that you'll have these things. Again, the biggest thing that the IRS is calling out in their notices about this that they've put out recently about unscrupulous third-party preparers is ones that do not advise clients of the need to amend their income taxes. So this is the statement that we send to all of our clients when they file, to tell them to make sure that they do amend their returns to adjust on the ERC funds. So very important part of the process that should be disclosed to the taxpayer. So the time to start preparing is now, before everybody forgets all the things that happened back in the wonderful pandemic days. So some of the things you'll want to have in your file are a list of employees and owners. So the owner wages, of course, do not qualify in this, and also relatives of owners. That's any related parties with an interest in the business. So if you have your husband, wife, sister, brother, children in the business, their wages definitely need to be accounted for and withheld from the calculation so that they do not receive ERC credits on those particular wages. The way that we do that is we get a huge payroll log. So this is part of our filing process. Some of the companies that I would not recommend choosing for the ERC filings don't ask for payroll logs. Sometimes they don't ask for PPP information. They just ask for 941s, and they look at the number of employees. They just do a quick amendment of those that doesn't account for these things. So you need to account for the PPP and for the owner wages that need to be stripped out on the payroll log. Previously filed tax forms. So of course, if they didn't file the 941 in the first place, they can't amend it and claim this credit. So if there's any missing ones, sometimes we found with our filings that they haven't received or processed maybe the third quarter of 2021 yet. So when we file to amend it, they say, well, you never filed it. So then you have to get them to find it and actually complete the processing of that. And then we're able to amend. So they have been asking for that. Notices of suspension of operations. So this is where you would look at any state, local, municipal, or federal orders that applied during COVID-related shutdowns that affected the business's operations, and tie those to the things that happened to them. Then if they're doing it based on revenue reduction, they'll need the gross receipts, so that because it's a gross receipts test for 2020, 2021 as compared to 2019. So you'll want to make sure that they have all of those things ready. That typically only applies if they're claiming it based on revenue reduction. However, if they are, the gross receipts also have to be under a certain amount if they're claiming the startup credit. If you're not familiar with the startup credit, that is it's a part of the ERC. It's less common. That if they began their company and began operations in 2020 or 2021, and they had less than $1 million in revenue, and they had W-2 employees, they are able to claim more of a smaller but still fairly substantial $50,000 per quarter ERC claim startup credit for Q3 and Q4 of 2021. So that is the only those 2 quarters that's eligible for. So for that one, you'd also need the gross receipts to make sure they were under $1 million. And then of course, the PPP application and loan forgiveness applications, along with the amounts and the dates received. So those are some of the things that are being asked for in these early IDRs that are being processed at this time. Some of the hot buttons and things that are most often pointed out as issues are that did the taxpayer identify the qualifying wages for the employee, the employer, the person who owns the business? It's for the person who owns more than 50% of the business, them along with their relatives. Their wages are not able to be included in this. So making sure that that was accounted for. Second, aggregation rule. This one is somewhat this is a fun one. So if one person owns several companies, like we're working with a client who owns several different restaurant groups, they're all in different EINs and they're all separate companies, but because the same person owns them, they get aggregated together. So under the aggregation rule, if one of the businesses qualifies, they all do, but it also can often make people too big to claim the ERC. So even if you have one 20-person restaurant company and then you have another 5 that all have 100, you're going to be over 500 full-time employee equivalents. So they would not be able to qualify. So they want to know how many other businesses are owned by the person claiming the credit to make sure that they are not too big. So this is the way to calculate the full-time employee roster. It's different than in any other, than most other tax issues, and it involves averaging the number of full-time employees who worked over 30 hours a week or 130 hours per month, and then you take the average to come up with the employee count. So this is the way that the IRS says to determine whether you're too large to claim this. So in 2020, if you're over 100, you're too large to claim it. In 2021, it needs to be under 500 employees. So 2021, which is the bulk of the credits in 2021 are much larger. They expanded it so businesses up to 500 employees can still claim it. And of course, they do definitely want to see the wage allocation between ERC and PPP funds to make sure that the same wages were not claimed for both. So we do recommend that you prepare your client files promptly and make sure that you have them ready in order to qualify and to turn in the documents with a processor. You don't need to have all of this, but just like you would save your receipts and any other records for other tax claims, you need to make sure you have these things in order. So the things that you want to include is a list of all employees and all owners, payroll logs, government orders, and that applied to the business, and a list of any related people who are related to the owner with an interest in the business. And then, I'm sorry, I'm just going to turn off that other thing so it won't ring again. Previously filed tax forms, so the 941s, the income taxes for those 3 years, gross receipts, PPP information, and the calculation of how the credit amount was determined. So that would be something that you would have kept on file as the CPA if you were the one who filed for them. If you used a third-party preparer, they would be able to provide you with that calculation to show exactly how they took the wages and the PPP and the impacts for each quarter to come up with the numbers. So this is all straight from the IRS Notice 2021-20 Q&A number 70. And some other things that you want to include is any government orders if they received things saying that they had to shut down, or if they, anything that they had specifically that they know about, how they determined the qualified health plan expenses. Some businesses actually use those when they're preparing this, and then other ones don't. But if they did include health plan expenses, you need to have that information. Documentation of aggregation. So for this one, you would need a gigantic spreadsheet saying how many hours were worked in 2019 and 2021, and in order to determine whether you were too large to claim it. And then Form 7200, if they did claim any advance payments, they'll need to see that as well. And then copies of the original and revised 941s. And this again is from the IRS notice. So we're going to get a little deeper into the shutdown impact part of it rather than the revenue reduction, because a lot of CPAs know about revenue reduction as a qualifier, but haven't really had experience working with the shutdown impacts. So please answer yes or no to this one to see if you.
All right, so we've got people answering the poll. Thank you, everybody. We'll give a few more, a little bit longer, let everybody answer in. So far, it's pretty much neck and neck. Oh my gosh, it's 50-50. So we'll see. We got a couple more who chime in. If you could chime in, folks, we're at 85%. Oh, 92%. Okay. So we'll count it down in 5, 4, 3, 2, 1. And the results are 54% said no.
Okay.
They have not filed an ERC claim using the shutdown impacts as the reason, and 46% said yes.
Great.
So roughly 50-50.
That's good. And this is a more challenging part of it because, of course, revenue reduction is very straightforward. You can see on the P&L whether they had lower revenue or not. So a lot of CPAs and tax preparers only would claim for the quarters that they were aware there was a revenue reduction. However, you can go back later and claim for additional quarters for the other types of shutdown impacts. So it's under the partial shutdown provision. There are several different things that you can claim for this. So we do see this quite a bit. We get a lot of people saying their CPA helped them with 1 or 2 quarters, but they want to know if they qualify for more. So the documentation required for these other shutdown impacts is different, of course, because it's not just a P&L. So it's good to know that some of you have done it and some of you haven't. And we do dig in more into each of these shutdown impacts that qualify in my other webinar. But I'll talk to you now about what are the ways to substantiate these things. So first, they want to know, how did the government orders interrupt the business in a more than nominal way? So more than 10%. So this can be based on a lot of different things. The suspension of business operations, they have to show that the government order interrupted at least a portion of their business, but they didn't have to completely shut it down. The full shutdown is one of the qualifiers, but the partial shutdown is a much broader one that includes a whole bunch of different things. So as far as the order is concerned, it can't just have been a recommendation, and it has to have negatively impacted their business. Something I saw that was a super easy one for this was it would be called a reduction in services offered. One of my clients was a hotel. On March 17th, I was actually there meeting with them, and they were ordered to shut down the bar. And they said, you may not have the bar open whatsoever. It's closed. And so that obviously reduced their income significantly, and it impacted the guest experience. So that would be a partial shutdown under the reduction in services offered claim. So that they would just keep a copy of that order to substantiate that. So the different types of shutdown impacts, I just told you about the reduction in services offered. Another one is supply chain disruptions. So that is based on, due to government orders, the suppliers were not able to produce and supply the business with things they needed. This stopped them from performing certain parts of their job. So for example, we do a lot of, in transportation, a lot of supply chain disruption qualifications. Detroit is where many of the things are made and processed for anything regarding automobiles and trucks. And additionally, things like Freightliner, as in Oregon, there's different huge companies throughout that do manufacturing of these things, and they were ordered to shut down. Some of them were ordered to actually start making respirators and the ventilators instead of making car parts. So they stopped making car parts, they started making ventilators, and therefore you couldn't get, as we know, the computer parts for, the chips. And then a lot of them couldn't get tires, couldn't get actual truck chassis, different body parts. They couldn't get cameras, the rear view cameras for their trucks. They couldn't get scanners, uniforms, all kinds of different things that were required by their business in order to operate, but these things were not available. So to substantiate this one, you would want the item that they couldn't get, such as tires, where they used to get it, such as Goodyear, where that place is located, Michigan, and then you would go to the database of shutdowns and look at all the Michigan shutdowns, and then put that on an Excel spreadsheet where you have this list of items, where the company that made them, the state that they were in, and the shutdown that goes with it. So you have your entire kind of chain of custody of why you couldn't get this thing that you needed because of the shutdown. So that is a way that we recommend people do to tie what happened to them with the shutdown. So this part is much more qualitative. This is not as cut and dried as revenue reduction, but there are ways to put numbers and facts to it. So that's what we ask people to do and to keep this in their own file when they do a filing with us. For reduction in hours, this would be fairly simple. It could just be, there's a curfew. Everyone had to shut down their store by 6. So that would just be a very simple. Prior to the pandemic, we would be open till 9 p.m. Due to government orders, we had to close at 6, and then just mark whichever quarters that took place in 2020, probably not 2021. Reduction in capacity. This one is continued for a very long time in a lot of places. Some of the states like Florida and Texas that were kind of wide open didn't have near as many restrictions, but a lot of other companies, a lot of other locations did. So before the pandemic, you basically had a fire code limit of how many people you could have in your store or your office or your manufacturing facility. Due to the social distancing requirements, you could only have 6. But they would help people figure out what the number was, and that was they'd have to reduce the number of people in their building, both customers and workers. So you would write down that there was an order to that effect, and then what the numbers were that you had to reduce to. So that would be reduction in capacity. Reduction in services offered, very broad. It could be, we've worked with a lot of like hospice organizations that used to have annual fundraisers where they made all their money, and these were big events where people would gather. They were ordered not to have more than 10 people at any one time, so they couldn't offer that service and couldn't obtain revenue in that way. Or doctors who couldn't perform elective surgeries, restaurants who had to switch to takeout, hotels who had to start close down their pools and their breakfast bars. There's any kind of thing that you used to do during the pandemic that you couldn't do due to these government orders. So you would just write down what happened. We couldn't deliver to a building because the building was shut down. And then what are the orders that was tied to? Then another one that's very broad is travel restrictions. So this one is about that you couldn't go to like trade shows. So trade shows, events, sales, conferences, any kind of thing that you used to go to in 2019, you would write down 2019, I went to 25 conferences and I went to 10 local meetups. And that's how I got my clients. I used to go, to meet people and make friends and then end up doing business with them. Those things were all canceled because you couldn't have gatherings. Therefore, this changed the way we got new customers and also, encouraged the building of new relationships and customer contacts. So travel restrictions is a fairly broad one that a lot of people had. So you would just write down, what do we do in 2019? What do we do in 2020? And what are some of the orders? Like, for example, Las Vegas was not allowed to have, the hotels were not allowed to have gatherings of more than, I'm not sure what the number is, but 20 or 50 people. So all these big trade shows were canceled. So that really did affect a lot of businesses, such as including Licio. We met them at a trade show, and Allison's group, and then several other businesses that we've met at trade shows. That was the way they did business. They couldn't do it in those years. So it really did change and affect that. Even if they didn't lose revenue, the operational change, you just need to document that for those 2 years. And the way the IRS says that the way to substantiate this is any records the employer relied upon to determine whether a more than nominal portion of its operations were suspended due to a government order, and whether the government order had a more than nominal effect on its operations. So there's examples are below: government orders, the actions you took, such as closing early, records of appointments. So for example, we work with a lot of home health care organizations. They used to be able to send chaplains and volunteers and other social workers in on their appointments and be paid for those services. The government orders said that they could only send in like licensed nurses. So they lost all the revenue from all the other services they used to be able to offer. So you would just have appointments. And okay, in 2019, we sent 100 social workers. In 2020, we sent 0. 2021, we sent 5. So that would show a more than nominal effect. So it can be also emails with order dates, shipment dates for supplies, or such as this is specifically for supply chain disruption. So things that they ordered and then they got a message back saying they couldn't receive it. A lot of people don't have those emails. They just called, like they called their local car shop to ask if they had something. They didn't have it. So in that case, you just write down, I called this guy. I asked him if he had tires. He didn't have tires. I couldn't get tires. So I had to stop driving my truck. So just kind of write down what happened. And then sales details. So percentage that from various sources. So let's say you used to sell 100 jackets. You couldn't get any jackets. So therefore you only were able to sell shirts. So you would show the different, how it changed over the years. So these are some suggestions that we have. There isn't a, hard and fast list of exactly what you have to include, but these are some of the examples that our clients have used to create these records that they rely upon to substantiate. So with all of this, detail that we're going into and being, audit ready, we also want to emphasize that this is not a bad thing, right? The ERC, we get a lot of calls. My accountant said I shouldn't apply because, the ERC is a scam or is some kind of strange thing that is not, may not be fairly applicable to your business. But it really does have a lot of, it is available to many different businesses, and the IRS has been, since it first came out, and urging people to qualify and apply for this to claim these credits. There's not a limit on it. There's not any $1 amount that they have. The time limit is up until April 15th, 2025 to receive the 2021 credits. So there's a few more years to do this, but just to keep in mind, this is something that the IRS has been encouraging people to do, and that our business has successfully claimed, along with our partners, over $6 billion in this credit. We have a team of 25 facilitation partners, and we pair them with CPAs. 86% of our business comes from CPAs who send their clients to us for their ERC. So you can have someone who does this full-time around the clock to do it. So this is some of our team members. They will be paired with a CPA. The CPA sends them their clients. We speak with them, and because it's a qualitative process, we need to hear their story in order to match it up with the rules and help them properly substantiate. So first we do that, and then the next step is for them to upload their 941s and payroll reports along with PPP information to our partner ERC specialists. They do the analysis, and they then come back with, in about a week to 2 weeks, with the final amount of the credit, where the client then will sign and will file on their behalf. So we wanted to make sure that you're aware that we have the service available to you. My team has about 25 facilitators. ERC Specialist has over 350 people working full-time on this credit alone, making sure that we are claiming it properly for our clients. We do additionally have a program where we share revenue with partners such as CPAs, tax preparers, financial consultants of any kind. We share 10% of our revenue with the client, with our partners. And 86% of our business does come from referral partners in this way. So when the client gets paid and receives their funds, they pay ERC specialists a percentage, and then we get a percentage of that. So, and then when we do that, we give you your 10%. So this is kind of some examples of basically credit sizes. So the 500,000 would be for a business with about 20 employees. If for the $1 million credit, that's a business with about 40 employees. So you would get a referral fee of $4,500. So Glenn Barber is asking me a question about amending tax returns to lower the payroll reductions because they received the ERTC. He's asking whether there's an interest charge for late payment and penalties. There is a notice that was put out about this by the IRS that says there's a safe harbor provision where they are, when people in good faith claim something based on what the information that was currently available, and then it changed, and so they had to amend. I'm not going to, promise this or say that I know that they're going to do this, but they're saying that if you write this down and you explain it to them, and that they do not charge penalties and interest on these payments because it's based on something that happened later. This was not originally intended to be claimed retroactively, but now that it is, it's created this kind of issue like that you mentioned, Glenn. So from what I understand, it's something that you would highlight with them and say and write down that information that you just shared, that you filed this based on this. Later on, you found out about this credit. Therefore, you're under this provision, you do not owe an additional interest and penalties. That is what I understand from reading that notice. So anyway, we would welcome the opportunity to help any of your clients with the ERC if you would like to refer them to us, and we would pair you with a dedicated facilitator who would help and kind of take this off your hands to where you don't have to dig in and learn all of these regulations, and you just be there to provide the detailed information that they need to file, but we help them with the qualitative part, which is explaining how what happened to them applies in this instance according to the government orders. So we also work very closely with Lisio. Many of our referral partners are Lisio clients, and we really love it when we see that. So Allison's going to share about how Lisio can help in this and many other processes.
Yeah, just super quick, guys. Obviously, there is security involved in exchanging these documents that have a tremendous amount of information that, if fallen into the wrong hands, could have very detrimental processes. So you kind of want to think like how your bank does. You want to give your clients a super easy way to transfer data to you and be very secure, very safe. You also want to make sure that your team can collaborate on that data and make sure that everybody can see it. So email is not a great way to do it because email is pretty much open. You don't want people texting you things. Some of your clients might just not have, they might be working at home, maybe not have a scanner. So you want to make sure that you have, and then most of you have a secure portal, which if you can get your clients to use it, that's great. If they don't use it, then you've got an issue. So just want to make sure that you understand that Lisio can make it super secure, drop dead easy for your clients. And we don't charge per client. So it's just, $40 a month per accountant user on your side. So it's very affordable. And as Sunshine said, a lot of the clients that she works with, a lot of the accountants are already using it, and it just makes it a seamless part of the process. So that's just, I just wanted to, is there anything you'd add there? I know you're going to talk about security in the danger zone as well.
Yeah,
but
the one thing we don't like is when people just send it like that. Sometimes they'll send
yeah,
all of the social security numbers and everything about everybody in their business. I'm like, no, don't do that. We don't, it all is supposed to go directly to ERC specialists through their secure portal, but in order to get it from the CPA to the payroll company to the customer,
that's the place where it can go awry. It's from the client, right? Yeah. And then the cool thing is if you are involved in an audit later, you have all of the documents and you can tag them ERC. So you can actually tag them by client and tag them by ERC so that you can find them really easily. I'm just going to go ahead and put the demo link in the chat so that everybody can see it. And then if you'd like to do that, just go ahead and set up a demo so that you can see it in action, because it can be a real game changer. And the fact that the client can self-serve anything that you put in there, and you can self-serve for them. You can also set tasks for them. So that's the other thing, Sunshine, is there may be data that's needed that gets bigger as the process goes through. And so you can think about Lisio in terms of the ones that you've already done. If you've done the ERC process for your clients, Lisio is a great thing for you to gather and store all of the documents. But if you're in the process of filing, that's a great way for you to get it over to ERC provider as well. So anyways, I just wanted to mention it. So carry on. I'm going to fade into the background here, but just wanted to make sure everybody understood why we're popping in here about this, is because the security is a really big deal.
Yeah, we don't want to have all that data floating around for sure. So thank you, Allison. Wonderful. So we do have one more poll coming up, And this is where we would love to invite you to receive some more information from Licio and ERC provider. So please go ahead and enter, and then we will follow up with some details after this if you'd like to know more. And we're also available for any questions you might have.
Yes, and we're available for questions. Yeah. Yeah. So go ahead and pop in. We've got whether you'd like any information or you know, and it's really just getting information, right? It's not like a, you know, big sales pitch. It's just understanding, you know, what your needs are. Yeah. Great. I've just got a few more people. We're at 70% here. And then we'd like to open it up for questions. So please put your specific questions into the Q&A. And we've got about 15 minutes left to answer them. Okay, so I'm going to count it down in 5, 4, 3, 2, and 1. And thank you for everyone who answered. All right. Okay. So yeah, so this is Sunshine's contact information. But does anyone have any specific questions? And it's actually okay if we don't. We'll just give Sunshine a few minutes to wrap up. Give everybody a little bit of time back.
Sounds good. And of course, you can always email me with any questions, and we're happy to help. Some people have more specific things they don't want to share with broader audience, but we're always happy to assist. And we hope to be able to help some of your clients to take this off your plate and make sure that you know that it's done correctly. And
yeah, the calculations do seem to me to be quite tricky, aren't they? Like based on 2019 employees, but you then have to look 2020 and 2021. I don't know. That to me, I was like, oh, okay.
Yeah.
Little boggling there. Yeah.
No, lots of little niggly things too related to the PVP especially. So it's nice.
And does your team provide spreadsheet templates for people to fill out? Like, or do you kind of like, do you have any sort of guidance on what the process is, you know, working with your team?
So it's all done through an online questionnaire that we actually go through with the client, and then they receive this portal where they upload all of their details. And so it has like examples of the what the detailed payroll report needs to look like, and what the 941s look like, and of course what they need for PPP. So it's kind of all yeah, you know, online.
Okay. All right, folks, I'm not seeing any questions pop in, but so I want to thank you, Sunshine, for once again an information-packed webinar, and we will be sending a recording out to all of you along with the PowerPoint and we hope that you will get in touch with either one of us. And the folks that said yes, we will be reaching out to you, so you'll get a separate reach out. All right, thank you so much, everybody, and Sunshine, have a great day. Everyone else, have a great day.
Thank you too.